I've been working with a couple recently and they are looking to change houses. In this situation, both people are retired and they're thinking that they need to get their house, their existing house, in order, ready to go, ready to put on the market before they can make a offer on a new house. So talking a little bit further with these people, their property is unencumbered, which means they do not have a loan on it. The bank still holds the security, which can be a good thing, but they were completely unaware that they could, in fact, talk to their bank and find out whether they could borrow against their existing property to put in an offer on a new property and technically be cash buyers, because they had lost out on a house previously because they had put the clause down to being conditional on selling their existing property. This is something that this couple was completely unaware of, that they could borrow against their existing home to fund the new house. Like I said to them, they will need to talk to their bank and they will have to meet certain criteria that their bank has in place. But it was certainly an avenue that they had not considered. So this can put people in a stronger position. It can potentially make them cash buyers. And you've got to work through the numbers and find out what worst case scenario is. So for this couple, it could be worst case scenario that they end up owning two properties. The fortunate thing for them is that their existing property, they already run an Airbnb from it, so they could keep that going, but they could also maybe consider running Airbnb or letting out on a longer term basis the main home, depending on how much work, of course, they want to do. But it does create options, it creates income positions and to obviously help reduce the cost of the loan. Again, I'm not giving financial advice. You do need to go and talk to your bank in regards to this. However, if that sort of thing is a consideration for you, then the other thing to take into account, and you would need to talk to your tax advisor or your accountant, and that is if you end up owning two properties, you end up letting one out, whether it's Airbnb or on a longer term rental basis, you have to declare that income, which could potentially mean that any expenses against that house could in fact be claimable as well. So things like the interest on the loan, rates, insurance, any sorts of repairs and maintenance. You will need to talk to your accountant regarding what you can and can't claim. But it certainly could be worth going and having a chat to your bank, seeing if that could put you in the strong position that it could make you a cash buyer, even though you haven't sold your existing house.